Hello, welcome to this Ned Davis research video where we will help you see the signals. My name is Brian Sanborn, NDR's Global Head of Investment Solutions. In this episode, we'll be speaking with NDR's Chief Economist, Alejandra Grandal. The debate on the economy for 2024 has been hard landing versus soft landing. But what if there's no landing? Alejandra, can you describe what a no landing scenario looks like?
Oh, I'd love to. And thanks, Brian, for having me on again. So, a no landing scenario, or what we would call an overheated economy, would include above potential growth and a reacceleration of inflation. So, for it to sort of pick up and go higher and higher. And we, saw some possible hints of this in recent data, including retail sales, GDP, and even some CPI inflation readings. First of all, the consumer remains resilient. Retail sales ended 2023 on a pretty strong note, rising a more than expected 0.6% in December. Notably, our measures of discretionary spending rose by more than double their long-term average. And as a result, GDP grew an annualized 3.3% in Q4, which incidentally is an above potential growth pace, and it was led by strong consumer expenditures. We also saw CPI growth surprise to the upside in December. We noticed that shelter prices just remain stubbornly high. They're down from their peak, but they're still high. And the closely watched supercore inflation also remains resilient.
Does that alter your 2024 forecast for more of a soft landing in the economy?
No, not at all. In fact, a soft landing in the US economy has been our base case scenario at NDR for quite some time, and then it has grown to become the consensus view. NDR's senior US economist, Vineta Dimitrova, in her 2024 outlook, assigned a 70% probability of a soft landing this year. So that's quite high. And the way we would define a soft landing as below trend economic growth and continued disinflation. So again, no recession, but below trend economic growth. And this is what we are seeing in the data. So we have a lot of in-house models and indicators. And one of our more closely watched indicators is our NDR inflation timing model. And if you look at its latest reading, it's consistent with moderate disinflation, which incidentally has been a historically bullish condition for equities. And when we've seen past periods of overheating, that model has either been in the moderate inflation zone or more likely in the high end or strong inflation zone. And we're just not close to that. Similarly, we have an economic timing model here at NDR, and it is currently consistent with slow growth. So no recession, but slow growth. And very similar to the inflation timing model, it's well below the strong growth readings that we've observed in past periods of overheating in the economy. So just the data is not there. Reasons, though, is we expect that delayed impact of tight monetary policy that we've seen over the past year and a half, 2 years almost, ebbing excess pandemic savings, rising consumer delinquencies, and political risk at home and abroad to weigh on output this year. So given these downside risks, that's why, Brian, you mentioned at the beginning, the alternative narrative to a soft landing has actually typically been recession, not no landing.
And what would the impact be on equity markets for a soft landing versus a no landing scenario?
Yeah, that's obviously what matters, right? So in the case of the no landing scenario, which, as I said, we would describe as an overheated economy, it's actually still been historically consistent with positive, but still below average equity returns. These overheated periods tend to last just a few months, but over the last 3 decades, it's also been associated with being in the middle of a Fed rate hike cycle. As of Q3, the indicator that we have in the chart right here was in the strong growth and low inflation period, which is actually associated with the best historical equity market performance. Now, a soft landing, recall this is a combination of slow growth and slow inflation, did have comparatively lower returns, but it was still consistent with above average equity returns.
Alejandra, thank you very much for your insights. NDR clients can read Alejandra's research notes in her weekly Global Economic Focus publication. The indicators Alejandra and the research team developed for our subscription service are also used in our model portfolios, which are available for direct delivery, on TAMPs, and through ETFs. For more information on NDR, we encourage you to visit ndr.com. Also, for those listening in audio-only mode, video versions, including charts of See the Signals, are available by going to info.ndr.com/ndr-signals. Thank you for joining us as we help you to see the signals. So long.